Rajat, I'll start off with the benchmark indices at 5100. Do you think we are likely to be tiring at these levels and we're going to be stuck in a tight range? And if you could also point out some chart trends that you're spotting on HOEC.
Well, let me start with the index. What I feel is that unless you see the index falling below 5092, I don't think there would be much of a problem. Of course, crossing 5112 is very crucial for any kind of an up move, and after that 5124 to about 5128 would be a resistance zone. Once crossed, then we can actually try and cross that 5145 to about 5150. The final resistance level as shown by the 200 exponential moving average, which is located at 5150. So if at all there were to be some kind of a selling, first watch out for 5092. If that gets broken, 5079 to about 5049, this is a major support area. Unless this is broken on closing price basis, I don't think bulls would have much of a problem pushing it up once again. So that being the case, that we might see a range bound scenario panning out between say 5128 on the upside and 5092 on the downside, and at best 5080 on the downside. So that is what I'm envisaging at the moment. Regarding HOEC, Aban, you have sort of preempted me. I was about to give this as a trading idea. At 117 it's still a buy, because it is likely to move up to 122 where the first resistance is located, and then the 200-day moving average is at 125, 124, 90 kind of levels. There it is likely to hit, and it is showing kind of an accumulation pattern at the bottom. So chances are that you would see a lot of buying interest coming into this. Yes, it's a buy at current levels. If you buy, put a stop loss below 110, because if just carry this trade over to the next session, probably that level of 125 would well be reached. That is the thing. So HOEC definitely looks good.
Ashok Leyland and Arvind Mills, those two stocks that Ajay spoke about, what's it looking like to you?
See, I would start with Arvind Mills. Arvind Mills, I would say that yes, that plant closure is definitely a problematic case, since the large percentage of its denim production comes from that. But if you look at the chart, then what you see is that with that kind of a development, it should have actually gone down below 70, but it's still trading at 76. That suggests that there is some resilience, and at least the traders are optimistic that most probably this impasse would be resolved very soon. Yet I would have to say that unless it crosses 80, you would see that Arvind Mills continue to show some degree of weakness at around 80 level. 90-day as well as say 200-day moving averages are located. So it would be pretty difficult for Arvind to cross that. And for a sign of weakness, you have to see it falling below 70. If that happens, then it would be very weak. Regarding Ashok Leyland, I would say good indications are coming from the price movement, that it is trading above 26.5, 27 kind of levels. That means the 200-day moving average has just been crossed. But one thing needs to be considered here is that the range between 27.5 to about 30 is a very crucial zone for Ashok Leyland. Unless this range is crossed with good volume buying support, it would be very difficult for Ashok Leyland to really sustain this bullish tempo. It has shown similar movements in the past but never sustained. So we need to watch out this range of 27.5 to 30 on the upside, and then falling below 26.5 once again would be a sign of weakness.
What are the top picks that you're identifying right now?
See, the stocks that I would suggest is, I have already talked about Hind Oil. Hind Oil, I would still keep a stop loss below 110, 122 to about 124.50 are the two targets to hold on to. Another stock is Speciality. Speciality Restaurants, I would buy it with a stop below 211.90 and keeping a target of 227. If these targets are not met, then carry these trades forward to the next session. Chances are that you will see such levels are reached. And the third trade I have is the currency future trade. This time I'm actually negative on the greenback for today. I would say that sell the USD INR June futures at the MCX with a stop above 56.21, target 55.80, 55.64 and 55.51. NCC, that looks to me to be a good bet also. NCC in the short term might well do well, and it can move up to levels like say 39 or 41 and put a stop loss below say something like 33 on the downside, and 39 to 41 can be, but this movement cannot be had in one day's time, because already today it is 7% up. So it is a continuous move. It is showing a lot of accumulation over the last 5-6 trading sessions. So chances are 40 to 41 would be reached say in a day or two.